Olá, bem-vindos a De Frente com o Touro diferente, especial Nasdaq. No episódio de hoje você acompanha a gravação especial que eu fiz na Nasdaq, a bolsa da tecnologia lá em Nova York, nos Estados Unidos. A partir de agora você vai conferir a entrevista com Brandon Tapper, o vice-presidente da Nasdaq, a bolsa da tecnologia dos Estados Unidos. Now, today, we're going to speak with Brandon Tapper. Thank you very much.
Thank you, Pablo. Thanks for coming in.
Thank you for receiving me here. He's the vice president here in Nasdaq and head of data for the Americas. We're talking about Canada, United States, Mexico, even Brazil, South America too, Chile, and so on. Is that correct?
Absolutely, yes.
Thank you very much. It's an honor to talk to you here.
Great.
It's an honor to be here in Nasdaq. Tell a little bit for our Brazilian fellows about yourself and a little bit about what do you do here in Nasdaq?
Sure. So I'm Brandon Tapper, and I head data for the Americas, and that, like you said, includes Canada, North America, United States, Mexico, Brazil, all of Latin America. And we're really here to help distribute content to investors to help them make better investment decisions. I've been with Nasdaq for about 20 years, just over, and about 10 in the data space. And I'm really just happy to be part of the culture here and our technological transformation. We're all about leading edge technology and kind of moving the markets further in the future.
All right.
Yeah.
Some Brazilian investors, although I speak a lot about Nasdaq on my shows in Brazil, but some of them might not be very familiar with Nasdaq. Although it's so beautiful and it's so well known, and we see this, the screens all over the planet. Please provide some an overview about Nasdaq for our Brazilian people that are watching.
Absolutely. So Nasdaq was actually created in 1971. We're the first electronic and the largest exchange. And what essentially we've done is we've built a technology company to help serve many investors and empower and use technology to help get there. And so Nasdaq really has four main business units, one of them being investment intelligence, where I reside today. And in 1971, we actually created the electronic exchange because there were a lot of biotech companies that were looking to gain capital and raise investments, and they didn't have a home, and they needed a platform to help them raise that capital. And so we created the exchange, the first electronic exchange, really on the heels of helping those biotech companies in the 70s raise capital and go to market. And because we did this, our DNA is really all about helping the small companies, helping in the startup, helping the small investors. Because if we help them, they're going to grow to be large firms or large investors. And so we really held out for those biotech companies, and on the heels of that became the technology companies, the Intels, the Microsofts, the Apples, the Amazons, and we're really here to kind of help them grow. And the new company that goes public tomorrow, we want to help them grow too. So everything in our DNA is about helping them grow. Like I said, we have four main business units. So the first one is what we call listings or corporate services, where we actually provide solutions to public companies to help them be better public companies. Tools as far as investor relations and exposure and visibility. But as you guys know, listings, the Apples and Intels and Ciscos of the world that are listed on the Nasdaq exchange, we help them gain capital, grow their business, and visibility to launch into the future. That's one. Number two is our trading business. So we actually own and operate 27 exchanges around the globe.
Whoa, 27?
27,
wow.
Yeah. Not many people realize that.
I didn't know that.
And of those 27 exchanges, equities, options, derivatives, fixed income, we actually help bring buyers and sellers together electronically. And that is the core of what we started in the 70s, what we do today, and the core of how we're going to help firms in the future tomorrow.
So you never had a non-electronic trade here, always electronic?
Always electronic. We did acquire the Philadelphia Stock Exchange, which we own today, and that was actually the first exchange.
But it was an acquisition
States.
and stuff.
It was acquisition, and up until this day, there is a trading floor in Philadelphia that has what we call open outcry, which does have some manual trading, but 99.999% of our markets are electronic.
Philadelphia is nearby, right?
Oh,
An
yeah,
hour and a half.
about an hour and a half.
We are in New York, just remembering everybody. We are in the United States of America, here in the Times Square, in the Nasdaq, in New York. Yep. But I cut you. You were talking
about. Please. And you know, everything's electronic, and so we actually take that in our third business unit, and we take the technology that runs our own markets, and we sell that platform and technology to many other exchanges around the globe. Some of them being in Latin America, the Hong Kong Stock Exchange, Singapore Stock Exchange, other exchanges that want to use our technology, because the investors that connect to technology at Nasdaq, they want to be able to flip the switch very easily and connect to other markets around the world. Not only do we sell that technology to exchanges, but to any electronic marketplace that brings buyers and sellers together. So whether it's an advertising exchange or you know, other markets, I call it the tent, where we actually bring the buyers and sellers together electronically. So we sell that technology across the globe.
Okay, amazing.
Yeah.
Amazing.
Yeah.
And you were a data specialist.
I'm a data specialist today. I think at Nasdaq, you know, we are a technology company. Everyone's a technologist. Everyone's a data specialist. And then if you think about some of the firms that you know today, data is the lifeblood of the markets. And that leads me to the fourth business unit, which we call investment intelligence, where we're actually distributing content around the world to help investors make better decisions, whether it's using...
Invest better.
Yeah, whether it's using fundamental data or stock price data or news. We want to make sure that they have access to the information. Now, you know, you get information these days on your mobile phone, on your watch, social media. Right? Younger generations are utilizing applications that they haven't utilized for years. Data information is out there for everyone, and it's important they have the right information so they can make really unique and investment decisions for the long-term growth.
So obviously data is very important for good investments for clients. But what kind of data what kind of data should investors be looking at and why?
Yep. So it all comes down to choice and preference from an investor. Obviously, we have a wide array of clients that we deal with, everything from large banks and institutions to hedge funds and quant funds to retail brokerages, right? So your Robinhood and eToro and Weebles of the world, obviously your Schwabs and Fidelities, where they're using applications that allow them to see what's happening out there. And, you know, when it comes down to the individual investors, the retail, the self-directed, they really just want to know in real time what a price is trading at, what is the supply and demand for that price, and obviously, is there any really unique news? Now, we have probably 200 data products that help investors get there, and every platform has a unique set of data that's useful for their investors or their clients. So it really ranges from historical data to charting to really seeing an update, you know, as my watch gives me a brief as to what's happening in the market. There's so much information out there. Investors go to multiple platforms to get it, and the idea is for them to have access and transparency and be able to understand why they're investing in a stock or a certain asset class.
Unbelievable.
Yeah.
Good, very good education for our Brazilian friends. Actually, in Brazil, the people, or back there in my country, they could be called like self-directed or retail investors. Okay, what's the landscape for the retail investor here in North America, and what do you think about the outlooks in here, United States?
Yeah. So that's a good question. I mean, if you think about what we've seen over the last couple of years in the markets, retail has never had it better. There's more retail investors than ever before. Obviously, there's been a surge.
Brazil too, although we're much smaller, Brazil too.
Absolutely, and you know what? It's actually a global thing, where in Asia, in Europe, in Latin America, specifically Brazil, countries that have wider middle class adoption and they have actually money to invest in beyond your typical savings account. They want to have exposure globally. And so what we've seen here in the United States is actually very similar to what we've seen around the world. If you think about, having access to information and transparency, number one. Two, having markets be accessible, that's kind of what we're all about, is making markets accessible to all types of investors, but also the ability for the retail or self-directed, as you call it, have tools and technology where they can take out their mobile device and buy something or look up a company or do some research or look on social media and get some ideas, go to some of the information forums to really get information. So what we've seen is it's a huge growth. However, the key to that growth is all about education.
Yes.
And we must together educate, kind of what you do on a daily basis. We educate investors to help them make good decisions, but also help them understand the importance of long-term and fundamental investing, so that they're not making rash decisions and they're thinking about their future and thinking about how not only to grow their wealth, but to protect their wealth as well.
Yes. In Brazil, just for you to know, we have the objective together with XP to touch 50 million people with financial education. And we're even going to, XP is even going to the public schools, so we're trying to change completely the Brazilian, how it used to be. And we're trying to make a new thing there. But how are we using technology to get data in the hands of more investors, and why this is so important?
Yeah, so an initiative that we've actually embarked on over the last couple of years helps use technology. As I mentioned, Nasdaq is a tech company, and we embrace technology for the future, but we want to empower the transformation and empower individuals to have access to information. I talked about the mobile device. That's key here. So a couple of years ago, we partnered with Amazon to make more data actually accessible in their cloud platforms. Because clients were coming to us and saying, I need access to your data immediately. I need access to information immediately. And then some of the legacy infrastructure that's been in place throughout the years of when we grew up, that really needs to get replaced with new technology. So we partner with Amazon. We're providing data over the cloud, and that not only allows applications, the mobile device, to get information directly from cloud services, but it allows us to help the startups and help some of the new technology companies, because there's a lot of new information and broker dealers that want to come up and help serve communities in areas such as Brazil and Mexico and Colombia, where we're making that data easily for them to digest and easy to access. What used to take months is now taking minutes. And really, that's how we embrace technology. And then we built at Nasdaq something called the Nasdaq Data Link, where it's a portal. It's data.nasdaq.com, very easily accessible for anyone to go on and use it as an information gathering tool to see all the different data points and all the different information that we supply in an easy and digestible, discoverable zone, so they can see all the data pieces we have. So we've kind of brought the data to them versus the other way around. And so that's how we're embracing technology. And again, our goal is to make markets accessible to everybody. We want to empower investors to come to markets, and eventually, with some of our other partnerships, and specifically, moving our markets to the cloud, which we just embraced and launched to do so in the next 10 years. We want everyone in the world to be able to tap in and access the markets and see information that is going to help them make those long-term trading decisions.
Unbelievable. Thank you. Very good explanation. Very good educational content to the Brazilian fellows.
Awesome.
Acompanhe agora a entrevista com J. Greg Nanny, chefe de research, né, chefe de pesquisa e análise e engajamento do cliente na Nasdaq Dorsey Wright. Você já vai entender o que é essa empresa Nasdaq Dorsey Wright. It's an honor to be here. It's a little cold here. But tell us a little bit about yourself and what's your role at Nasdaq.
Sure. Well, thank you for being here. It's a pleasure. It's great to be here in the middle of New York City. The sun is coming out. It's a little bit cold, but the sun's coming out to warm up for you a little bit.
Yeah, we can see your backers here. Yep.
So I'm with Nasdaq Dorsey Wright, and Dorsey Wright as a company was founded back in 1987 as an independent outsourced research department for financial professionals and investors around the world.
Wow.
And everything that we do at Dorsey Wright is centered around technical analysis, and we can talk more about that in a little bit. The reason we're here today is we were bought by Nasdaq in 2015. Okay. And so we are still part of the broader Nasdaq indexing business. And what we do from the Dorsey Wright perspective is provide research tools and analytics to financial advisors, to investors around the world. When we look at our research platform, it truly is a global product that we have out in the marketplace because it tracks securities, it tracks stocks that trade on exchanges all over the world, not just here in the US. And so we continue to do that today. And what I do at Dorsey Wright specifically is lead a number of the research efforts in terms of putting out content on a very regular basis, but then also engaging with clients, educating investors on how to utilize
not only tools, you also educate.
Also educate, absolutely. And that's a big part of what we do. Education is paramount in the financial markets. And the more that we can educate, the more that we can get information in the hands of investors to make more informed decisions, that's really, really important.
Well, let's get a piece of this education that you have. I see that you have a beautiful talking. Explain to the Brazilian friends, what is technical analysis exactly, and who uses, and why it uses, and how can it be used?
Yeah, well, technical analysis, I think for many, is something that we all inherently understand, but don't necessarily know that we're looking at technical analysis. I went through the university as a finance major and never once was taught technical analysis. It wasn't until I got into the actual financial industry and learned about technical analysis and learned and understood how financial professionals
we learned in the field.
Learned in the field. In job training is what we did. And there are a lot of classes out there on technical analysis. There's a lot of education that's out there. But from the university perspective, it was all fundamentals, which is very, very important, right? Fundamentals. We all want to understand and buy companies that are a good value, right? We want to buy good value stocks. But the fundamentals answer a very different question than the technicals do. Fundamentals are going to tell us what companies we want to own. The technicals are going to tell us when do we want to own the stock of that company. Two very, very different methods and forms of analysis.
What and when.
But they can be used in conjunction, in tandem, together to make more informed investment decisions. And so really when you get down to technical analysis, it's nothing more than evaluating price trends over time. There's lots of different forms of technical analysis. There's lots of different certifications that you may be inclined to look at if you want to go down the lines of technical analysis, but it's identifying market trends, whether it's on the individual stock level or just broad market perspective, and identifying the trends that persist in the market. Oftentimes when we look at just the price of securities, what we know is that individual market participants are casting their votes. They're betting every day with their dollars, either buying or selling stock, based on their own analysis. And so what the price of the security does is, at the end of the day, takes all of that information into account, and then we can evaluate and we can essentially track what the market participants are doing in the market, and then we can look to identify whether the market participants are bidding the price of the stock up or are they bidding the price of the stock down, and then we can see those prevailing trends. And so when we think about technical analysis, we focus on one very specific form of technical analysis. That is the point and figure method of technical analysis. It's not the only form by any means. There's lots of different technical analysis schools of thought out there. But the point and figure method for us at Dorsey Wright is nothing more than a logical, organized way to uncover the imbalances between supply and demand. And if we think about that for a second, if we think about goods that we consume, let's forget about the stock market for a second and just think about things that we buy. hamburgers, coats, baseball bats, soccer balls, whatever it might be. If there's more demand, if there's more buyers for that good than there are sellers, what happens to the price of the stock?
Goes up.
It goes up. If there's more sellers than buyers, it goes down.
Yeah.
The point and figure methodology is a logical, organized way to uncover the imbalances between supply and demand in the marketplace. In other words, it gives us a view and lens in terms of what stocks are being controlled by demand and what stocks are being controlled by supply.
Unbelievable, unbelievable. I'm sure you know that we do have BDRs, companies that are listed here in Nasdaq that trade in Brazil. So if Brazilian would like to have access to these tools, to this educational product, where should they go?
Sure. So there's probably the easiest if you go to our website, dorseyright.com.
Okay, it's going to be in the screen.
You can see that, and then we offer a free trial of our research.
All right.
So dorseyright.com/trial. There's a lot of educational information out there. There's tutorials, there's videos, there's websites that you can go and look at. But then you can also have access for 30 days to analysis on all of the stocks, not just U.S. listed, but Brazilian listed, the BDRs that are listed, everything that's traded. We also look at exchange traded funds as well. So that's probably the best place to go to get some more information specifically on what the Dorsey Wright research platform really is all about.
All right. So using this technical perspective of yours and of Dorsey Wright funds, what are you seeing in the markets now? And can you tell us which sectors are technically stronger and which sectors are technically weaker?
Sure. So the markets, at least in the U.S. equity markets, have been very strong for a number of years. We've seen new all-time highs continually throughout 2021. We've seen some volatility come back into the market here in 2022.
Yeah.
And
volatility is the name of the game.
Volatility has certainly come back in real form.
Yes.
And coming off of a year like 2021, where there really wasn't much volatility. The markets were quiet. They continually steadily moved higher. They were really led by the big, large cap growth, big technology companies that were leading the charge to this new all-time highs.
Yeah.
And that's important when you look at just the broader markets, as at least for a U.S. equity index like the S&P 500 or even the Nasdaq 100. Technology, those large cap growth stocks, those are the most important stocks, the most important segment of those indexes because they're the biggest weight. About 60% of the Nasdaq 100 is technology, about 25% of the S&P 500.
They're so relevant.
So as goes those sectors, oftentimes so goes the indexes. Well, when you look at what's happened so far in 2022, those areas have been among the weaker. So you've seen some selling pressure. You've seen supply come back into not only those sectors, but the markets. And so what you've seen is a situation where a lot of the equity indexes have come under pressure, where we've seen supply, at least in the near term, take over given the uncertainty that's surrounding the markets, not only everything geopolitically, but also we've got here in the U.S. Inflationary fears going on. You've got commodity prices going crazy. So certainly a lot of uncertainty, and you're seeing that show up in the market prices. Now, with that said, there's generally always opportunity that persists, and one of the areas that we've really seen that has come as a beneficiary of the recent market action has been those resource-rich sectors like energy and basic materials.
Okay.
Those two sectors right there, as well as financials, and I'll mention that in a minute, but energy and basic materials have emerged as the leaders from a sector perspective in 2022, given what we've seen with commodity prices, not only crude oil, but all commodities really have moved.
Iron ore.
Every iron ore and everything.
Agriculture.
Absolutely, and it's amazing. You look at coffee and you look at everything across the board.
Soy.
Wheat. You go buy your local coffee and it's now $5 instead of $4.
Exactly.
And you're seeing that show up, and then the real impact of what you're doing.
It's been good for Brazil, though. It's been very good.
You're absolutely right, because if you contrast the U.S. equity benchmarks, where they're heavily in technology, the Brazilian benchmarks are heavy in what? Resources, materials, energy. And then financials is another big one. Financials has done has moved up as a strong sector. And that's a sector that's more value oriented from an investment perspective, and it often tends to do well. A lot of the banks can tend to do well when interest rates are rising.
Yes.
And so that's going to be something.
Only the expectation of the rising is already,
and they can lend money at higher rates.
Yeah.
So there's
spreads get bigger, gets bigger overall.
So those are kind of the three areas that we're watching right now from a sector leadership perspective, while the more growth-oriented sectors like technology and like some of your
capital intensive, they have to borrow money, so it gets expensive. And,
so those, the growth-oriented, technology, consumer discretionary, those are among the sectors that have been weak, especially so far in 2022.
I kind of agree with almost everything you said, if not everything. And let's talk about a little bit about the Dorsey Wright Fund Scores.
Sure.
So what is exactly the Nasdaq Dorsey Wright Fund Scores, and how can investors use those when making investment decisions?
Sure. So the fund score or rating system that we have for not only individual securities, but exchange traded funds as well.
ETFs too.
ETFs as well.
All right.
It's based on 100% still based on technical analysis, but it's looking at the trend of stocks as well as the relative strength. So if I break it down quickly, the technical attributes for every single stock, if you were to go in and look at a stock in our system, you'll see 0 through 5, 5 being the strongest. The goal is, in investing, if we can stack as many odds in our favor as possible, then we hopefully, potentially increase the odds of success in our investing. And so with using technical attributes, that 0 through 5 rating is designed to identify which stocks are strong from a technical perspective and which are weak. So anything 3 or better is considered to be investment grade. Something 4 and 5 is what we have found over time to be the best performing stocks over time.
Awesome.
So it's a number that you can use as a check to see, maybe you've done your fundamental homework and I say I like these 5 companies. You could come in and say which of those 5 fundamentally sound companies are also technically sound on their fund score perspective. So we've done a lot of research. There's a lot of research that we put out there that just talks about how those technical attributes or fund scores can be utilized by investors. But the long and short of it is, the goal with that is to focus on the higher scoring stocks or ETFs when making those investment decisions.
Thank you very much.
Thank you
for having this conversation with me.
It was a pleasure.
E o programa de hoje fica por aqui. Nos vemos no próximo De Frente com o Touro. Ah, vai, Tourinho! Vai, Tourinho!
Realização Jovem Pan News.